What are the recession signals that everyone is watching at the same time? Starting with the SAM rule, with the CPI that can tell you either we have a deflation or inflation going on, and maybe the unemployment rate. If it goes up fast, then we are in a recession. If it goes down slow, then we are nowhere near a recession. These are the most used, in my opinion, recession indicators. And I'm here to tell you and explain to you why they are all shit. Exactly, you heard it right. Either it's the SAM rule, or maybe the CPI, or maybe unemployment. These are all laggards. They are not leaders. Starting with this SAM rule recession indicator, this is actually a mathematical equation based on the unemployment, which again is a laggard. Let me explain why is that. And in the second part of the clip, we're going to talk about the leaders, the real leaders that will tell us we would have a recession, which in my opinion, it is very fast and it's filled with opportunity, because when you have something like 1 month, 2 months, or maybe a 3 to 6 month big drop in the S&P, for example, what comes next are the biggest opportunities of your life. But let's start with the first. The SAM rule, which is a shit recession indicator, is subtracting mathematical data from the unemployment. Just search the Google and they will tell you what the equation is. But going into the original chart of the unemployment rate, you can see that the problem is not really the unemployment creeping to the upside, it's actually the unemployment after a recession creeping down bad to the downside. You can see it before 2020, you can see it before the GFC, with the top in June 03, going down, going down, going down, stabilizing for a bit, then jump up. This kind of macro data is lagging always. They are always reporting with lag, just like the CPI. Maybe you know, maybe you didn't know, they actually declared the CPI something like 10 to 12 days after the month of the CPI print was over. So basically we had the April CPI declared something like May 11th. The next CPI print for June is going to be declared on July 15th. So basically a 15-day delay. A lot can happen in 15 days. The same like the unemployment. So what I was mentioning all over Twitter, if you follow me there, basically the whole creep up is good news for us. The bad news actually starts when the unemployment rate keeps dropping and doesn't tell any story. You can also see the SAM recession rule. It just spikes up, then goes down, spikes up, goes down. Something like an almost dead patient, which then comes back fast to life and then dies again. So what is this telling us? Absolutely nothing. You can go into history, something like, I don't know, March 2017. You watch this SAM recession rule. What does this look like? Nothing. It looks like nothing. Just like before the pandemic. In February 2020, it looked exactly the same as something like 9 years before. No tell whatsoever. And then when the pandemic came, the unemployment printed, this activated, but when it was at the peak, you were already missed out from the biggest opportunities of your life. June 2020. So basically this is a shit indicator. Unemployment, just the same. I want to actually see unemployment going down again. Then I would start to worry. The CPI print the same, maybe some of you guys use Truflation, and also Truflation can be just another lens in all this sea of macroscopic data. Wow, I'm really into wordplay today. Let's go to the real recession indicators. Starting with the US 10-year. Why is this a leading recession indicator? To better explain, maybe for normies, you witnessed something like last year, the birth of Polymarket. Polymarket is a market where betting real money happens. And where we have real money, we also have truth there. Wherever there is skin in the game, something to lose, that is probably the best place to look for the truth. The bond market has something like 140 trillions of dollars in it. These are the US 10-year yields. There is a lot to lose here if you are not paying attention. Also, the US 2-year, basically the same market, the bond market. And going all the way to the US 3-month, that is the last one to react. Just like before the pandemic, we had the signal right before March start. But, again, if you watch the US 10-year and you do some basic technical analysis on the chart, you can see that this one broke out at the end of January. This right here was the signal. And going all the way to the US 3-month, this one waited for another whole month to print some red candles and also drop below the current support. So this is where a whole month of preparation has taken place in the markets that matter. The bond market and also, wait for it, the stock market. Yes, the stock market also gave the signal. From a technical analysis standpoint, this was the line in the sand, also with 1 month lag versus the US 10-year. Because back then the market cap of the S&P 500 was something like half what we have now. So basically a third of the entire bond market. Because that's where first the real money is, in the bond market, then in the stock market. So when this line in the sand was broken down, this was the signal. The S&P gave another signal, but you had a whole month to prepare for this. So the bond market and also the stock market are the real indicators for when the recession should start. So if you want to see the first clip that I did on the US 3-month and also the US 10-year, you have it here on my channel, and I recommend that you binge watch all my clips, something like 8. Let's see, 1, 2, 3, 4, 5, 6, 7, 8. And this is the 9th. It will take you something like 1.5 hours, and you will see all my stance regarding the stock market and also the crypto market, but starting again with the bond market. So what is the bond market telling us right now? Again, if you know something about technical analysis, this thing that we're in right now is a big distribution top, which simultaneously can be a reaccumulation range. But given other indicators that I've mentioned in my other clips, like Fed rates and where we are in the real cycle, I'm more inclined to believe that this is not a reaccumulation range going up afterwards, but it's actually a distribution top before we go down again. And after that, from 2026, we continue up. But that is another discussion. This whole fractal right here would look very familiar to me if I went to the Bitcoin chart back in 21, which was actually shorter, but very, very similar. Something like this, leading diagonal. This one was the line in the sand, broken down, retested, and that's all she wrote. This is what I'm looking for the bonds. And how I'm imagining the real signal for the real recession is something like that. You can even draw some more lines in the sand, something like this, which again is very telling to me. And from this one, the same, very telling, we have 1, 2, and my guess would be that we will have the third and the final. And when this starts to happen, in my opinion, this is the place that risk on, like Bitcoin and crypto and some other small caps in the stock market, would outperform everything else. It could look like that, or maybe it could look something like this, and another one down. And when the US 3 months loses this support next, and we have something like a cascading events, this is another signal right here. And if we put out the US interest rates, on which everyone seems to be an expert now, they all scream, let's do rate cuts, because they're comparing to this one right here. But in my opinion, next time we have to cut the rates is because the bond market has failed. Something like this already happened. I would not want to see this. As long as these rate cuts are kept paused, in my opinion, the market will continue to go higher. And I would watch the US 10-year. When it has the breakdown, I would not panic here. I would rejoice because I'm invested in risk on in this time of the cycle. And I would be worried from something like this, maybe another backtest, because the next leg down is coming up, announcing maybe something like 1 month in advance before this is about to happen too. And also the stock market would already gave the signal with something like a month lag. These for me are real recession indicators. If somehow I get invalidated and we have maybe in September something like a soft cut at 25 basis points, while these have not started the breakdown, while the US 3 months hasn't started the breakdown, then in my opinion we are good. That's why I prefer to use rates also as a lagging indicator. And I'm looking at the US 10-year. Also you can look at the US 2-year. You can see that this one already started the breakdown, so it's a bit advanced in its breakdown. But this is how I would watch if a recession is on the line and we have some major downtrend coming to us, something like 2022, or maybe 2020 in the pandemic, or maybe something like the GFC, which I highly doubt, because this was actually the end of the secular bear market that started in the 2000s. And in my opinion, the next secular bear market should start after the start of the next decade. But again, this is another discussion. I'll do a clip about it. For now, just chill, because actually the risk on markets, it doesn't matter if it's the crypto market or the small caps in the stock market. Before this needs to go down and also this continues the breakdown, the small caps and the low caps and the mid caps should give another signal, and the signal is rallies. There's no such thing as a cycle end without small caps and low caps rallying for a short period of time, something like 2 to 4 months, and then signals and signals. So basically this is how I'm viewing the recession signals. I hope you got something out of this. Again, maybe binge watch all the clips. You would understand better how I look at the markets. Also, be subscribed for the next clip that is coming, because I do not know when it's coming and I do not know what it's going to be about. I'm gathering information over Twitter, and if you want deeper dives into the market, I'm doing this stuff for members with weekly market updates, and also we have a Discord channel. Check out the description and I'll see you in the next one. Bye.